Hey everyone, this is Dr. Tom Carr, aka Dr. Stocks of drstocks.com, drstoxx.com, and our new site, drstoxtrading.com, drstoxxtrading.com. Now, this is the second part of a two-part series on how to find the best stocks for trading. If you missed the first installment of this series, no worries. I'm going to go back over the trading scan that we talked about in that first installment, and then we'll look today at how to whittle down that short list of stocks to a more manageable set of stocks that we'll then further analyze for entries and exits. Before I get to that, I just want to show you a real quick thing that I forgot to mention to you yesterday on our new in the last installment. You might be watching this several years after that was recorded. On our sister site, drstoxtrading.com, I wanted to point out a couple of things. If you click this little button up here at the top right-hand corner and give us your email address, I'm going to send you a free special report, a trading manual that describes in greater detail some of the things that we're talking about in today's video installment. Some of the screens that I use and how powerful it is to combine both technical analysis with fundamental analysis. As I said in the first installment, technical analysis by itself does not work consistently. If a trader is using only technical analysis and is making money, then he or she is trading more on discretion than on technical analysis itself. And I'm saying that to you after years and years and years of backtesting technical only systems. They just don't work. They can't outperform the S&P 500. You need to add discretion, and in my opinion, you need to add some fundamental analysis, which is what we do in all of our newsletters. Now, I want to also show you that if you scroll down and click on, you'll learn all about our materials and our new letters. If you click on this video right here, Hot Stocks Letter, $10,000 investment, etc., you're going to learn a little bit more about what we're talking about here, the combination of technical analysis with fundamental analysis, and just how powerful a compounding element those two things are when combined together. So I just want to point that out. This is something I teach all of my students. You can't just rely on technical analysis. You're going to have to use some fundamentals in your trading process. Now, let's get back to our screen. And this is the screen that we set up in the first installment. We have 9 filters altogether, and I call this a basic trading screen. What we're doing here is we're forming a watch list of stocks that have already been filtered out for fundamental strength in terms of both growth of earnings, growth of sales, and valuation. And then we threw in a set of other filters. Now, let me just go over these briefly if you missed the first installment, so we're all on the same page here. I first am limiting stocks to only those priced over $10 per share and over 500,000 shares per day. So we don't want thinly traded stocks. We don't want low-priced stocks. Now, I do trade low-priced stocks. I have a whole letter devoted to cheap stocks with strong fundamental growth. I also have a whole letter on the Dr. Stocks trading site devoted to penny stocks, which are stocks trading under $2 per share, even under $1 per share. But those are turnaround plays, and those are stocks with strong value, but they've been beaten down for various reasons, and because of their value are likely to go back up again. That's our most profitable letter. We're averaging over 180% per year in that letter, so it does work very well. But in our case here, we're looking at stocks that are priced over $10 per share, which gets us into a whole different set of stocks, usually larger cap stocks, the marquee name stocks, the must-own stocks, the stocks that show up on the IBD Top 50 list, that sort of thing. We're also looking for stocks that, this should not say under 1 beta, this should say over 1, so we'll change that. So we're looking for stocks that have a beta over 1.0, which is to say they are more volatile than the S&P 500. This is our way of leveraging the movements of the overall market. The market goes up 1%. We want our stocks to go up more than 1%, and that's what that beta filter allows us to do. We're looking for stocks with a positive net institutional purchase over the past few weeks and months. So hedge funds are buying, mutual funds are buying, professional investors, investment banks are buying shares of our stock more than they are selling them. That's a positive thing. We also want stocks that show EPS growth over 25% in the last year. That gets us into a very rarefied set of companies with strong earnings growth. We want stocks that are priced at a valuation under $2 per, a price to sales ratio of 2 or less, under 2. And the lower the better, as far as we're concerned. When you have high EPS growth and low price to sales ratio, you've got a winning combination right there. Those two factors right there, in my research, my years and years of research, tell me that this is right here, this set of two is the strongest correlation to forward price movement over the near term. So we want those two on our screen for sure. We're also looking for positive sales growth in the last quarter. So we want something good happening in the company that incited or catalyzed a strong sales growth in the last quarter of the company's history, which usually indicates something like a new product has come online. If it's a retail stock, maybe they've opened up a set of new stores, maybe their same store sales are growing up. Something good is happening. Not just growth in earnings, because you can, of course, fudge that through a variety of ways. You can't fudge sales. So we want a strong positive sales growth over the last quarter. We want institutional ownership over 30%. A little trick I learned from William O'Neill, who likes to see this even over 40%, which means that, you know, big money has skin in the game, and they're going to want to prop up this company as much as they can, and, you know, weigh in on the board of governors and the CEO and that sort of thing. So all sorts of positive pressure happens when you have institutions standing firmly behind a company. And lastly, we want the RSI at 14 to not be oversold. We want this at 50 or higher. Now, there are a couple of things on our screen that we could fudge a bit if we're getting too few stocks coming through. When I put these parameters on the scan and run it, I get a total of 29 stocks. That's a pretty healthy list, but maybe I want more. Maybe I want 50 or 60 stocks. A couple of things I could change. I could go down from 500 to, say, 400, and that gives me one more stock, not much. Let's go down to 300, and that gives me two more stocks. And then I can go from not oversold over 50 to not oversold over 40, which will give me a few stocks that maybe weren't quite as strong in the last quarter, or maybe the last 6 months they've been a little bit on the weaker side, but they're still not oversold. That's a healthy thing, a healthy trend. That gets us up to 37 stocks. So you can fudge on those sorts of things. All right, now let's run our scan. Now this is new material now for installment 2. What we're looking at is a set of stocks. One of the first things I like to do is hit the Snapshot button, and that gives me a quick glance at some of the fundamentals of the company and a technical price chart. And I like to eyeball these and make notes of stocks that I like for both of those reasons. A lot of green, either black and green over here on the fundamental side, not a lot of red, and a stock that is not overbought and is showing some sort of a recognizable trending pattern with a nice entry point. So those are things I'm looking for just in this eyeballing of the chart, and I will eliminate stocks that have problems on one side or the other or both, and I will make I'll circle stocks that are showing a lot of green on the right and a lot of good technical stuff on the left. Okay, now that's one thing that I'll do, and that usually will whittle my 37 stocks down to maybe 20 or 25 or so. The second thing that I'll do, and I'll just do this as the last thing we'll talk about today in our third installment, we'll drill down a little more carefully into some of these details, is I click on the valuation. And in the stocks that are remaining on my list, now I'd have to go into the portfolio of these stocks and by hand eliminate those that I've already eliminated in my Snapshot look through. So I might be down now to 20, 25 stocks. I'm going to eliminate maybe another 5 or 7 of those by clicking one simple tab here. Now these are all of your valuation metrics, right? Price to earnings over the last 12 months, forward price to earnings, projected price to earnings going forward 12 months, your price to earnings growth ratio, your price to sales ratio, your price to book, price to cash, price to free cash flow, et cetera, and then your various growth metrics. I'm only interested in this one right here, price to sales. As I said before, the stocks with the lowest price to sales and the highest EPS growth, and we've got all stocks that are showing EPS over 25% over the last year, that's all high. The ones with the lowest price to sales, highest earnings growth are going to be your best performers over the near term. That's on average. That's my research, and it's verified by tons and tons of back testing. And if you're interested in the details of all of that, I do reveal all of those details in my trading webinar called Trade for a Living, the Complete Stock and Options course. You can find that on our drstocks.com site. It comes with a free year's subscription to all of our 5 newsletters on that site. You'll also get 2 trading webinars. You'll get 2 trading manuals. You get all kinds of free stuff. But if you're interested in really drilling down in some of these technical details, then that's the one you'd want to order. But what I do is I click on this price to sales tab, and that will sort all the stocks based on price to sales, low to high. We want low, right? So what we're saying, get rid of this, Dad. What we're saying with the price to sales ratio at a low peg is that we want stocks that have very strong monetary values, it's really early in the morning here. My brain's still not up yet. Really high values of sales per share and very relatively low price to that value. So the lower the price and the higher the sales, the lower this valuation will be. And those are the kinds of stocks, because they are undervalued, those are the kinds of stocks that really tend to perform strongly and outperform over the near term, because that undervaluation will seek a kind of happy medium where it's more fairly valued, and it tends to do that very quickly, especially in a bull market. So what I do is I click on this price to sales, and right at the very top I have some of the stocks that I would be most interested in. And in fact, as I'm looking at these stocks right now, I'm already long some of these because they've shown up on some of my other scans. So that's to me a nice confirmation. I like these stocks. I'm going to keep these stocks on my list. The stocks that I want to eliminate are the ones that are at the bottom of that list, and we can get there by simply clicking the price to sales ratio again. That will bring the highest price to sales valuation stocks to the top, and I'm going to eliminate, I don't know, maybe the top 10 or 12 of those. Maybe less, maybe more. It just depends on how many stocks I have overall on my list. 37 stocks. I probably want to get this down to about 25 stocks before I start making further cuts to the list. So I'm going to eliminate about a dozen of those. So I'm going to take the top 12 from ADS down to WDC, and I'm just going to eliminate those from my list. So that gets me down to 25 stocks, which have all kinds of good things going for them fundamentally. They also now are undervalued, relatively speaking, to the rest of the market, to peers, and to so on. And the next thing that we'll need to do, and we'll talk about this in the third installment, is look at the technical price chart. We'll make some further cuts from there. And then in the fourth installment, we're going to talk about how do you time your entries and manage your trades once they are on. Okay, that's it for today. God bless everyone. We'll see you soon. Bye now.